Hey guys, it's Matthew here, president of VIP Financial Education again, and this is VIP's Financial Literacy series, where I like to take a look at financial terms and topics that are critical to your success in both personal and business finances. But in these videos, I actually like to go a little beyond simply defining and describing what a term or topic is and actually discuss why it matters and what makes it matter to you and your personal financial situation. So today we're going to be looking at credit reports. That's coming up next. All right, guys, so we talked a lot about credit scores in last week's videos. Today I want to talk about actual credit reports. A credit report is a detailed report that's prepared by a credit bureau, and it contains an individual's credit history. Now, credit bureaus collect information and create credit reports based on that information as well as the credit history. And lenders use the report along with other details in order to determine your loan application's eligibility and your creditworthiness. So here in the United States, that really boils down to three major credit bureaus, reporting bureaus. And the first is TransUnion, the second is Experian, and the third is Equifax. Should all sound very familiar to you. Each one of these reporting companies collect information about your personal details, and then they also look into your bill paying habits in order to create a unique credit report on you. We call this your life's report card, your financial report card. Now, you may have seen that your credit scores can differ. That's because there are often very small differences between the three reports. Each bureau collects different information from each creditor, so they'll begin to vary over time. Now, credit reports include personal information such as current and previous addresses. It includes your social security number, it includes your employment history, and these reports also will include credit history summaries, such as the number and types of accounts that you have that are either in good standing or past due. And it also includes detailed accounts of information related to high balances, as well as your credit limits, and the date accounts were open. Credit reports list credit inquiries as well, and they detail the accounts that were turned over to credit agencies, such as information about liens or even wage garnishments are included. Now, generally, credit reports retain negative information for 7 years, while bankruptcies, considered the worst of the worst on credit, are typically going to stay on your credit report for 10 years. So how can credit reports be accessed? Well, if an individual submits an application for credit, an insurance policy, or a rental property, the creditor, the insurer, and the landlord, along with select others, are actually legally allowed to access your credit report. Employers may also request a copy of an individual's credit report as long as the individual agrees and also grants permission ahead of time in writing. These entities typically are going to have to pay for the report, which is how the credit bureaus actually earn their money. Do you have to pay for your own credit report? Well, not always. The Fair Credit Reporting Act actually requires each of the three credit reporting bureaus to supply consumers with a free credit report once per year. Federal law also entitles consumers to receive a free credit report if any company has taken adverse action against you. And this includes denial of credit. So if you're ever turned down for a debt weapon, you can get access to a credit report. Insurance or employment opportunities that were turned down, reports from collection agencies or judgments. But consumers must request the report within 60 days from the date of the adverse action, typically. In addition, consumers who are on welfare or people who are unemployed and plan to look for a job within 60 days are also entitled to a free credit report from the bureaus. Now, we at VIP Financial Education always recommend checking out Credit Karma, which is a terrific free resource for keeping an eye on your credit report. And although it's not utilizing the FICO scoring model, Credit Karma works great for staying on top of your current credit whereabouts. And if you're looking good on Credit Karma, chances are you're also going to be looking good on FICO scores as well. Now that you've got your report, let's go ahead and talk about how to read it properly. Credit reports typically divide information into 4 sections. The top of the report will usually contain personal information about you. In many cases, the section is going to include variances of the consumer's name, your social security number. Simply because the information was reported incorrectly by a lender or another entity, it will include the variation. I have several variations that are all wrong on my credit report, which can be corrected if you feel the need. The second section compromises the bulk of most reports, and that includes the detailed information on your lines of credit. These are also called trade lines. Now, the third section includes public records. This will include things like your bankruptcies, any judgments, tax liens, and so forth. The bottom of the report is going to list all of the entities that have recently inquired to see your credit report. So your inquiries are going to be listed at the bottom. So why do your credit reports matter? Well, the more you know about what your overall credit worthiness is, the more you're able to leverage it to your benefit. If you're asking that question, you haven't spent enough time here on this channel, because whether saving on interest costs by, say, getting lower interest rates or being approved for that new mortgage, mortgage or a new debt weapon, staying on top of your credit report and your credit scores is going to go a long way. I attribute 100% of my success to always strategically managing an optimized credit status. As I've stated on previous videos, guys, I stay current on my credit as often as daily. Now, I realize that that's overkill, but it does go a long way to keeping me informed so that I can make better decisions toward the outcome that I'm seeking. I am goal-oriented. Most people fall short of goals because they don't set them and are not proactively reaching for them. Credit should be a tool working for you, not working against you. Now, this has been an episode of VIP's Financial Literacy Series. Please comment below with any financial terms or topics that you'd like us to discuss further in this series. And also make sure you hit that like button if you'd like us to do more videos on this topic. Credit is always very, very popular, everybody. Everybody loves to talk about credit and how we can maximize it. So make sure you drop that thumbs up on this video if you're somebody that wants to continue to see us do more on this. We do upload a few times every week, so make sure you hit that bell in order to turn on the post notifications so you're alerted every time a new video hits. We'll see you on the next one. Take care.
Alrighty, so I realize that some of you have not gotten one of the single most popular budgeting tools available, not to mention it's free, and that is called the Cash Flow Cruncher. So what I want to do today is walk you through the process of downloading your very own copy. It comes in the form of an Excel spreadsheet, so it's very easy to use and it's quick to navigate. So let's go ahead and walk through that process together. Go to cashflowcruncher.com, which will take you to the download page. Simply type your email address into the field to claim your free copy and go ahead and select the red button. Immediately, it'll pull up the download button, which will open a new Cash Flow Cruncher spreadsheet. The first page it'll open is the Cash Flow Summary tab, which is a non-editable page. It's very important to understand that this opening tab will not require you to put any information into these fields. This actually imports the data from the other tabs below. Now, if you've ever used an Excel spreadsheet, you'll navigate the spreadsheet by going to individual pages down here. And it'll start with the revenue and assets page. On this page, you'll want to itemize each individual income that you bring into the household or the business. Now, it's always been my recommendation that you create an individual cash flow cruncher for your businesses, an individual cash flow cruncher for your real estate, and an individual cash flow cruncher for your household.